Hi, this is Terry Campbell with Johnson Insurance with another installment of Outside the Box. Today I have joining me my teammate, Natalie Winters. Natalie has been in the insurance business and at Johnson for 11 years. She's got a lot of knowledge and a lot of experience, and she's extremely good at what she does. And she's awesome at helping folks to come up with the right programs, the right coverages, and customer service is outstanding. So she's going to be with me today to talk about replacement costs and some of the things that go along with it. But I'm going to ask her to just real quickly introduce herself since it's first time on here, and then I'm going to start asking her some questions.
Thanks for having me on, Terry. Yep, he already said I've been with Johnson Insurance for 11 years, focused on commercial insurance specifically. The last 3 years, I've headed up our sales team, and I've decided to switch roles and help build the self-storage vertical with Terry, who you guys all know is the best of the best. So I'm excited to be working with him.
All right. Well, one of the things we hear a lot about is, people are constantly trying to find ways to lower their premiums. The costs have gone up a lot over the last few years, and they're looking for ways to lower them. Well, sometimes when we have these conversations, we find out they're not insured properly. They don't have the proper amount. They're underinsured, and that's dangerous, and we don't want to have that. So we're going to talk about replacement cost. It's one of the sticking points we see a lot of where there's pushback quite a bit. So I'm going to ask Natalie a few questions about that. But first of all, the first question is, can you tell us, Natalie, what are the replacement costs? What is a replacement cost?
Yeah, it's simple. Replacement cost is the actual cost to rebuild your property today. What I find when I'm talking to my clients is a lot of the time they get very confused on what that number means. They'll send me an appraisal that the bank came up with, or they'll tell me what they purchased the property for. And those numbers are just not the same. If a hurricane comes through and takes out your entire property tomorrow, what is it going to cost to rebuild that tomorrow? And that number is very different from these other numbers that you're getting from other sources.
So how does somebody come up, how the carriers come up with the
Yeah.
replacement cost?
So carriers and agents can use online replacement cost estimation tools to come close to what true replacement cost value should be. Now, these tools are based on industry classes and building construction types and are set by the ISO. So there's a lot to be said for using those programs, but they're not always spot on. They're not always updated. So the most important thing that you can do is to partner with an agent that really understands the nuances of your specific industry and is connected to the actual contractors and all of the different aspects of that industry to know what is the actual cost to build that building today. Those numbers aren't always the same. So by partnering with an independent agent like Johnson Insurance, we're able to go to bat for you when a carrier comes back and says, oh, well, that self-storage building needs to be insured for $100 a square foot. And we're like, whoa, 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 whoa. We just did multiple builders risk policies last week that say this is what it costs to build. It's actually $60 per square foot. Where is this coming into play? And usually we can send in this information to the carrier to override what their system is telling them the replacement cost limit should be.
Now, one of the things that we've seen that's caused some really high replacement cost in certain areas that are prone to catastrophic events and that have
Mhm.
just had catastrophic events. Can you speak to that a little bit?
Yeah, absolutely. It's something that a lot of people don't take into consideration is a large scale disaster happening in their area. So catastrophic loss is labeled a CAT claim in the insurance industry. And when you have CAT claims come through, the demand for repairs and renovations increase while the supplies and labor are extremely limited, which equals an increased cost to replace your property. So we're just talking with a few carriers recently that have said, hey, we have to insure this for $80 a square foot or $90 a square foot. The loss that the hurricane that just hit through Florida, this is what the actual cost to rebuild this facility that was just built 2 years ago cost. So it's definitely something to take into consideration.
So you can get one on your premium just to be covered because you're more likely to experience a claim, and then your replacement costs on the backside whenever it comes time to actually rebuild it. There's going to be so much competition for materials and labor. It's just higher, so you could get hit twice
Absolutely.
on that.
Absolutely. And it all comes down to how much risk can you take on yourself? And those are conversations for individual clients, and you determine what's best for you.
Awesome. One last question is, if someone's not properly insured, if they're underinsured, so to speak, there's something called a coinsurance clause or a
Yep.
coinsurance penalty. Can you speak to a little bit of that and give an example of how that works?
Absolutely. So, co-insurance is simply an agreement between the business owner and the insurance company to share the cost of a claim. So, depending on your insurance company, there may be an co-insurance clause in there that says that you need to keep 80% or 90% or 100% of full replacement cost on the policy. And what this means is the insurance company wants to make sure that you are paying enough premium, they're taking enough rate to cover the loss, that you guys are sharing in that loss jointly. So, quick math example, let's say your property is the full replacement cost is $1 million and they require an 80% coinsurance clause. That means for you to avoid any coinsurance penalty, you need to maintain $800,000 of property insurance on that property. So, let's say a hurricane comes through, you should have had $800,000 to meet that 80% coinsurance, but you only had 600,000. That means you have to do a little math equation, which we like to call the did over should. You take your 800,000, which you should have had, and your 600,000, which you did have, and that equals 75%. You only are insuring that building to 75% of what you should have been insuring it for. So when they adjust that loss, the insurance company is only going to pay 75%, and you are now out of pocket the other 25% because you didn't meet that coinsurance requirement. So another reason to partner with an agency that is fully aware of what coinsurance is and make sure not only do we come up with your true replacement cost value, but we talk to you about the coinsurance and we make sure that penalty is not on the table for you.
Awesome. Well, these are some very important things that need to be considered and discussed as you're insuring your property. And I hope this has been helpful and informative to you. And I want to thank Natalie again for being on here with me today and helping to share this information. And we look forward to having you back on the next installment of Johnson Insurance Outside the Box.